Your sales are soaring. The phone is buzzing with notifications. You feel like you're on top of the world, right? But what if all that noise is just a distraction, masking a business that's secretly bleeding money? You see those high sales figures and think you're killing it, but you could be just a few payroll cycles away from a total financial disaster. Stick with me, because I'm going to show you how your profit and loss statement tells the real story of your business and exactly where to find the money leaks before it's too late. I learned this one the hard way. My first business hit 6 figures in revenue, and I thought, this is it, I've made it. I was working around the clock, sales kept climbing, but every time I looked at my bank account, it was shrinking. I felt this quiet, constant panic. How could we be so busy, but have nothing to show for it? The problem was hiding in plain sight, on my profit and loss statement. It's a document I'd glance at, but never really understood. There's a saying, revenue is vanity, profit is sanity, but cash is reality. I was chasing vanity, totally blind to the fact that my business was getting less profitable with every single order. All right, let's pull back the curtain on the financial report that holds all the secrets, the profit and loss, or P&L statement. Think of it as your business's financial story. It follows a simple top-down formula. First, you have revenue at the very top. This is your top line, all the money you bring in. Next, you subtract the cost of goods sold. These are the direct costs tied to making your product. What's left is your gross profit. This number is huge. It tells you the core profitability of what you're selling. From there, we subtract your operating expenses. This is all the stuff that keeps the lights on. And finally, at the very bottom, you get your net profit, the bottom line. This is what your business actually earned. Once you get that basic structure, you can use your P&L to go on a hunt for the money leaks sinking your business. Here are the 3 usual suspects. Leak number 1, a weak gross profit margin. This happens when your cost of goods sold is way too high for your prices. You can have amazing sales, but if you're only making a few bucks on each one, you'll never cover your overhead. It feels like running on a hamster wheel. You're working harder and harder just to stay in the same place. If this margin shrinks, that's a massive red flag. Leak number 2, bloated operating expenses. I call this death by 1,000 cuts. It's the software subscription you forgot about, the ad campaign that isn't working, the extra office supplies you just don't need. On their own, they seem tiny, but together, they can suck your profits dry. If your operating expenses are growing faster than your sales, it's a sign your overhead is way too heavy for your business to carry. Leak number 3, the cash flow gap. Now this is the most dangerous leak because your P&L won't show it to you directly. See, your P&L shows profit, not cash. A business can be profitable on paper but go bankrupt because it runs out of actual money. This happens when clients take forever to pay their invoices or when you have to pay for inventory months before you can even sell it. Listen closely. Profit is theory, cash is fact. So how do you fix this? Here are 3 things you need to start doing right now to plug these leaks. Step 1, actually read your P&L every single month. It's your number 1 tool for making smart decisions. Step 2, calculate your key margins. Don't just stare at the bottom line. Calculate your gross profit and net profit margins as percentages to spot trends. Step 3, conduct a leak audit. Go through your operating expenses line by line. Slashing just 10% in unnecessary costs can have a massive impact. Your P&L is the story of your business's health. If you've ever felt that anxiety of seeing big sales but an empty bank account, share your story in the comments. And if you want more no-nonsense advice for building a profitable business, hit that subscribe button.